Good afternoon, everyone. Happy Friday. Quick look here at the North American equity markets, and I'm going to start with those U.S. markets, kind of separate them out a little bit here because there's certainly different performances. In terms of the U.S. markets today, the NASDAQ, S&P 500, the Dow, as well as the Russell 2000, all up by about 1% to 2%, with some real heavy buying and some real conviction to buy into those closing bells. So perhaps a bit of a positive sign. Away from that, in terms of today's moves, Philip Morris, MO is the ticker there, was up by 4.6%. It got an upgrade over at Jefferies, the analyst positive on the stock, the company. And I would just point out, if you missed my Joe Rabel interview, I know I keep going back to that, but some of the charts that he showed us a week ago have performed very well. And the tobacco companies were some of the companies he was highlighting to us in terms of some strong technical charts. Also to the upside today, L Brands up by close to 4%. They, of course, are the owner of Victoria's Secret and Bath & Body Works. They came out with some strong guidance, increasing their guidance. It seems as though the stimulus checks are sending people to Victoria's Secret as well as Bath & Body Works in terms of purchasing products. Stepping back, though, just for a moment in terms of the weekly performance we've seen, the Dow and the S&P, despite the push and the pull throughout the week in terms of concerns on higher interest rates, both are up by about 1.5%. The NASDAQ, we've seen a lot of selling pressure in some of those tech stocks, but the NASDAQ didn't fare too badly at the end of the day, down by 0.5%. I would say, though, that the Russell 2000, despite a bit of a recovery today, is down 3% on the weekly performance, and it has been trending lower for 6 weeks in a row. So you are certainly seeing some profit taking within the small cap space, which of course has performed so well as of late. That U.S. 10-year yield that we focus so much on as a cause for concern in the markets in terms of putting downward pressure on valuations did pull back below that 1.7% level. So maybe that's giving a little bit of a reprieve in the markets today. And also on the weekly basis, of course. We are starting to see some nice strength in REITs. I've been trying to point those out to you. They were up by 4.2% on the week, so definitely investors kind of stepping into REITs, which have obviously been hit because of the pandemic, concern in terms of real estate demand. We've also seen some continued strength into the energy stocks and sector up by 2.4%. This is the United States. Over the past week, and we've seen 3 weeks of gains. I also want to point out as well, because there's been a lot of movement in the price of WTI this week, it actually did rally up by 4% today. Away from that, in terms of just some of the news flow, look out for what we're going to hear from President Biden next week. More details in terms of his fiscal stimulus plan, Build Back Better. That will be released on March the 31st. We've also heard a lot of various Fed speak, so U.S. Federal Reserve Chair as well as the President. Really no, of the Federal Reserve, no change in terms of the narrative, essentially keeping rates lower for longer. They want to make sure they surpass that 2% inflation mark. And in terms of corporate news, Tesla was down by 5.5% on the week, despite the fact that Cathie Wood's ARK Investments put a $3,000 price target on the stock, in case you missed that. Nike down by 3.3%, the latest boycott target for Chinese social media. And also, of course, we continue to see COVID vaccination trends in the United States accelerate. That has been a big support for the U.S. markets. Away from that, when we take a look at the Canadian market, it was up by about 0.5 percentage point today, down by 0.5% over the past week. But we are still up by 7.6% on a year-to-date basis, really driven by healthcare stocks, which of course means cannabis companies, energy stocks, as well as banks. So those have been the key areas of strength for the Canadian economy. Stepping back and just taking a look at some of the big headline news items this week. CP Rail is going to be acquiring Kansas City Southern for it's a $29 billion deal. It will be the first continental railway linking Mexico, the United States, and Canada. We also, of course, continue to watch our vaccine trends. 9.5% of Canadians have received their first dose. 9.5%. It's 42% in the UK and 25% in the United States. We are expecting to see or receive the delayed Moderna vaccines next week. And also on that front, there's been more concern about delaying the Pfizer second dose for those in compromised positions and the elderly. Maybe we'll see some speed up of that. Again, it's a 4-week or 21 days in the United States, and we're looking at 4 months here in terms of receiving that second dose. In terms of other news items that were important here in Canada, The Supreme Court did uphold the federal carbon tax. We also see Canada getting in the crosshairs of China, and those tensions really increasing. China did block Canadian officials from attending the two Michaels trial for espionage. They were required to wait in the hallway. They were joined by 22 diplomats from around the world in show of Western support. China lashed out at Canada on the back of that. And also, of course, Canada did sanction 4 high-ranking Chinese officials. China saying that Canada doesn't have a place to comment. We also learned that the federal government will table their first budget in 2 years on April the 19th. Keep in mind that they will require the support from at least one opposition party in order to not trigger an election. And lastly, in terms of stocks items, I would just say that materials and energy as well as real estate worked today, and Western Fraser got upgraded over at TD. And I'll leave it there. Have a great weekend, I should say, and we'll see you next week.